Hello and welcome to another episode of our Private Equity Podcast. In today's episode, we'll be discussing a topic that is of great importance in the private equity world, and that is how private equity firms can create sustainable value in their investments. This is a topic that is relevant for investors, firms, and anyone who wants to understand how value is created and maintained in the private equity market. Private equity firms are known for their financial expertise and their ability to make profitable investments. However, in today's world, it's not enough to just make a profit. Companies and investors are looking for more than just financial returns. They want to see sustainable value creation. So, how can private equity firms achieve this? There are several ways, and we'll be discussing these in depth in this podcast. The first thing that private equity firms can do is to have a clear understanding of the company and its operations. This means conducting thorough due diligence and identifying potential risks and opportunities. Private equity firms should also have a deep understanding of the industry in which the company operates, as well as the competitive landscape. Once a private equity firm has invested in a company, it's important to have a solid plan in place for creating value. This plan should be based on a long-term vision for the company, and should focus on both operational improvements and strategic initiatives. Operational improvements can include streamlining processes, improving efficiencies, and reducing costs. Private equity firms can also focus on improving the company's infrastructure, such as IT systems, supply chain management, and financial reporting. Strategic initiatives can include expanding the company's product line, entering new markets, and developing new partnerships. Private equity firms can also focus on improving the company's brand and reputation, as well as its customer relationships. In order for these initiatives to be successful, private equity firms must be actively involved in the company's day-to-day operations. This means working closely with management to develop and implement plans, as well as monitoring progress and making necessary adjustments along the way. Another key factor in creating sustainable value in private equity investments is having a strong exit strategy. This means identifying potential buyers or IPO opportunities early on in the investment process and working towards optimizing the company's value for that exit. In order to achieve these goals, private equity firms must have a deep understanding of the market and the potential buyers, as well as a clear understanding of the company's strengths and weaknesses. Finally, creating sustainable value in private equity investments requires a focus on social and environmental responsibility. Private equity firms must be aware of the impact that their investments have on society and the environment, and should work towards creating positive change in these areas. This means investing in companies that have strong social and environmental policies, as well as working with management to develop and implement effective sustainability strategies. In conclusion, sustainable value creation in private equity investments requires a focus on operational improvements, strategic initiatives, strong management, and a commitment to social and environmental responsibility. Private equity firms must have a clear understanding of the company and the industry, and work closely with management to develop and implement plans that will lead to long-term success. We hope you found this podcast informative, and we look forward to bringing you more insights into the world of private equity in our next episode. Thank you for listening.